Micron Technology stock is crashing. The company has seen a drop of nearly 43% from its all-time high, marking a significant decline in its value. This sharp fall is primarily driven by the ongoing geopolitical tensions between the United States and China. These tensions have escalated, with concerns surrounding supply chains and the semiconductor industry, in particular, facing challenges due to potential sanctions and restrictions. Micron has been directly impacted by China's moves to restrict the use of its chips, a response to U.S. policies that have attempted to curb China's access to cutting-edge semiconductor technology. Before this crash, Micron Technology stock was trading at around $157, marking its 52-week high. However, following these developments, the stock has plummeted and is now trading around $89. This is a drastic decline for one of the leading memory chip manufacturers in the world, raising concerns for investors about whether this trend will continue or if there's a rebound on the horizon. So, why is this happening, and what should you do as an investor? In this video, we're going to cover everything you need to know about the crash, the market's reaction, and most importantly, what you should do in this dip. But before we dive in, make sure to hit that subscribe button and give this video a thumbs up if you find it helpful, so you never miss an update on the stock market and Micron Technology. Alright, so Micron Technology stock, along with other semiconductor companies, has been heavily affected by a combination of macroeconomic and industry-specific challenges. First, let's discuss the broader market context. The entire semiconductor sector has been experiencing significant volatility, largely due to ongoing supply chain disruptions and fluctuating demand patterns. These disruptions have been exacerbated by the trade war between the U.S. and China, which has now been intensified by the Biden administration's ongoing restrictions on technology transfers. This has created a highly uncertain environment for companies in the semiconductor industry. Micron, being a crucial player in the memory chip sector, is caught in the middle of this geopolitical struggle. China, which has been a major consumer of memory chips, represents a significant market for Micron. The recent restrictions imposed by China have put Micron's revenue streams from this critical market at risk, leading to a dramatic investor reaction. Micron's revenue streams have historically relied on global markets, with China being one of the largest consumers of memory chips. These chips are used in everything from smartphones to servers, and Micron has always had a strong presence in this sector. The restrictions, however, have severely damaged Micron's ability to access a vital revenue source. China's moves appear to be a response to U.S. actions that have sought to curb China's access to advanced technologies, specifically those involved in semiconductor manufacturing. As the global economy becomes increasingly dependent on cutting-edge technology, any disruptions in the supply chain can ripple across industries, and Micron is feeling the effects in real time. Investors, wary of the long-term consequences of this geopolitical chess game, have responded by pulling back their positions in the company, which has resulted in the sharp decline in stock price. Another factor contributing to Micron's stock decline is the weak guidance from other major players in the semiconductor industry. For example, ASML, a leading supplier of chip-making equipment, recently provided weaker-than-expected forecasts. ASML's guidance pointed to a softening demand for semiconductor products, which has further impacted investor confidence across the sector. When key players in the supply chain, like ASML, issue negative outlooks, it casts doubt on the health of the entire industry. Despite Micron's strong position within the memory chip market, it has not been insulated from these broader sector trends. Investors often respond not just to company-specific challenges, but to broader industry movements, and the semiconductor industry is currently in a period of uncertainty. This situation has been compounded by additional geopolitical concerns surrounding Taiwan, a crucial player in the semiconductor manufacturing ecosystem. With much of the world's semiconductor production reliant on Taiwanese companies, any tension in the region can cause market-wide panic. The threat of future conflicts or disruptions has made investors more cautious, resulting in further stock market volatility. The market's reaction to these issues has been both swift and severe. Analysts have responded by downgrading Micron stock, citing the geopolitical risks and potential revenue impacts as primary concerns. This has led to a downward adjustment in the company's valuation as investors brace for possible revenue declines. Despite this, some analysts maintain an optimistic long-term view, suggesting that demand for memory chips is expected to rebound as technology sectors such as data centers and AI continue to expand. However, the current environment remains fraught with uncertainty, leading to investor hesitation. Many are waiting for clearer signals about how the U.S.-China tensions will evolve and how Micron will address these challenges moving forward. While Micron's position in the memory chip sector remains strong, It's important to remember that the semiconductor industry is highly cyclical. Periods of rapid growth are often followed by slowdowns, as companies adjust to shifts in supply and demand. Currently, the broader semiconductor industry is experiencing a slowdown, as demand for consumer electronics has softened following the pandemic-driven surge. This has affected not only Micron, but also other key players in the sector. As demand has weakened, so too has pricing power, which is a critical factor in the profitability of semiconductor companies. Memory chips, which are often considered a commodity, are especially sensitive to price fluctuations. Even small changes in supply or demand can have outsized effects on revenue and profitability. In terms of market sentiment, the outlook for Micron is mixed. While some analysts still see value in Micron at its current levels, others advocate for caution. For instance, Goldman Sachs recently revised its target for Micron, recognizing that while the long-term outlook remains promising, driven by increasing demand for data storage and AI applications, there are significant short-term risks. The unpredictable nature of the geopolitical landscape, combined with ongoing challenges within the semiconductor sector, means that the stock is likely to continue experiencing volatility. This mixed sentiment is reflected in Micron's stock price, as the market remains uncertain about the company's immediate future. For long-term investors, Micron's current situation presents both risk and opportunity. On the one hand, the company's leadership in the memory chip market positions it well for future growth. As technologies such as AI, cloud computing, and 5G networks continue to evolve, demand for memory chips is expected to increase. This could eventually lead to a strong recovery in Micron's stock price. On the other hand, the geopolitical and industry-specific risks cannot be ignored. Investors who are more risk-averse may choose to wait for further clarity before committing to any significant investment in the company. So, what should you do as an investor? Micron remains a fundamentally strong company, boasting a solid balance sheet and a leading position in the memory chip market. The long-term demand for memory chips is likely to increase, driven by the growth of data centers, AI, and other technology sectors. However, the near-term risks are substantial due to ongoing geopolitical tensions and industry challenges. If you are a long-term investor, this dip could represent a buying opportunity, particularly if you believe that the geopolitical situation will eventually stabilize and Micron will recover its market position in China. Conversely, if you are risk-averse or focused on short-term gains, it might be wise to wait for more clarity before making any significant investments. The stock may continue to face further declines if U.S.-China relations worsen or if additional negative news impacts the semiconductor industry. Looking ahead, Micron's future will largely hinge on its ability to navigate these geopolitical challenges. The company has been working on diversifying its supply chain and reducing its reliance on the Chinese market, but these efforts are expected to take time to yield results. If Micron can successfully expand its presence in other markets and maintain its innovation in the memory chip sector, there is potential for a strong rebound. However, given the current risks, investors should proceed with caution and stay informed about the evolving geopolitical landscape and its impact on Micron's operations. Well, folks, that's it for today's update. Micron Technology is facing significant challenges, but it's important to remember that the company has weathered storms before and demonstrated resilience. As always, make sure to conduct your own research and carefully consider your investment strategy before making any decisions. If you found this analysis helpful, don't forget to like and subscribe to our channel for more updates on the stock market. Thanks for watching, and we'll see you in the next video.